Hi, this is Zach Mayer with the Bulletin Board Heroes here at Zach's Traders Cafe for Friday, the 20th of September. Starting on with the FTSE 100, which is will hit that resistance line there, the red one from back in May, 83.50 actually, the normal level there. But we're tweeting that and the rising 50-day line at 82.50 and the floor of the channel there, 82.30. Ideally, we stay above the floor of the channel from last September, and ideally we have an end-of-day close through 83.50. Although after the non-interest rate cut yesterday, we are obviously a little bit weaker here, and the difference between the US and the UK is in lights. If we do break back below the 82.30 area, then there's a risk of a push down to the floor of that falling trend channel from May around the 80.20 level. That's very near to the rising 200-day moving average as well. Moving on to the DAX, and here we can see that we are near the highs, or in fact we nudged through the highs there through 19,000, but back a bit now, and interesting that we've got gap down and then a gap up, so it's a bear trap island reversal. We're hoping that obviously we get an end of day close through 19,000 to give us a new leg to the upside, to the top of that rising trend channel from October last year through 20,000. Otherwise, we might need a test of the floor of the channel and the 50-day line near 18,300. We would have a little sell signal there if we have an end of day close back below the floor of the gap from the middle of the week around 18,700. Moving on to the Dow, and here back on top here with a record high, or the record levels, rising trend channel there from this time last year, top of the channel there. 42,000, well basically 43,000 now, looking for that by the end of next month, while we remain above recent support around 41,500. That was the old July resistance, or July-August resistance, and now coming in as support. Worst case scenario is that we have to test the 50-day line again at 40,500. Moving on to Bitcoin, which is also in better shape now, perhaps because of the Fed move, and nudging the 200-day line 63,600, looking for the top of that falling trend channel from back in February at 68,000, maybe by the end of this month. Ideally, we stay above the 50-day line there at 59,000 and to push the floor of the gap 61,500. RSI at 62, and we had the RSI bounce off neutral 50, which was anticipating, or did anticipate, the latest bounce for Bitcoin. On to gold, which is going from strength to strength within that rising trend channel from December. Top of the channel there now, 2680, which we're looking for by the end of next month, and especially while we remain above the August resistance zone, 2560.70. We're at the highs, but the RSI is still not in the overbought area. We're at 67 versus overbought 70. Moving on to the stocks, and a stock which I wasn't expecting, or really defies the odds in terms of what the fundamentals are versus the share price. But here we've got this mid-move consolidation for Amigo, and breaking above resistance on the way down there at 0.56. Above that, looking for up to a penny if the stock can retain its listing, and ideally we stay on the right side of that 0.5 zone anyway. In the meantime, we've had the RSI at or above neutral 50 since the shares were at the low, so that is very impressive, and also actually was flagging the rally that we are seeing. On to Angle, which I believe had some news the other day. Can't remember exactly which day it was, but the reason for inclusion today, apart from the fact that I haven't looked at it for a while, is the way that we had an unfilled gap to the upside yesterday off the low, and that does suggest a bit of a turnaround could be on its way, maybe up to the top of that falling trend channel from February at 15.3 pence by the end of next month, but just a glimmer of hope there on that. We had the rebound for Avacta after the Deutsche Bank intervention, but we're down today with a gap, unfilled gap to the downside, which is not great. That suggests that, especially as it's come after a hammer candle, a gravestone candle yesterday, unfilled gap to the downside today, so that suggests we've got a risk of testing that uptrend line from July at 56 pence, 57 pence, even if we then push back up again. The main source of worry is the way that the 50 and 200-day lines are both falling in parallel, which can provide negative momentum, as of course we have seen with the failures at the 200-day line over the last month. Moving on to a happier situation, which is Blackbird. Here you can see that the shares have made good on the promise of the break of the 50 and 200 day lines at 6 pence. We were looking for the top of the range towards 9 pence or maybe 10 pence. Hopefully we can get that by the end of this month, and ideally we stay on the right side of 7 pence in the meantime. Signs of recovery at Empire Metals, where I said, I think yesterday, that we've got extended support there between 6 3/4 and 7 pence, and the shares approaching the first target there, 200-day line 8.85 pence, and the best case would be up to 13 3/4 by the end of next month. So we would have maybe a rally as we had last October, November for the shares. Upside value while we're above 7 pence. On to global petroleum, which is making slow but steady progress. We've got this V-shaped turnaround or U-shaped turnaround. Want to see an end of day or end of a week close above 0.11. If we can do that, then the initial target there, 0.14. At the top of that triangle there from January, best case up to 0.21 by the end of next month if we get the kind of move that we had last December, January for the shares. The other point to note is the way that both the 50 and 200-day lines are rising now. We're in the run-up to a golden cross, and probably a week or two away, the run-up to the golden cross, or a golden cross, is usually the strongest part of the cycle. Onto a stock which is also trying to turn around after falling back, which is GCM here. Looks like it's been a triangle reversal. Bear trap rebound from below the July support there at 3 pence, and above that looking for up to 4.5 pence by the end of next month, which is the area of the 200-day moving average. Initially, obviously, there's resistance at 3.5 pence and the 50-day line, but the call is we are turning around. Onto MyHealthChecked, which I managed to forget about looking at for many days, and in the meantime, the requested stock has rallied very well. We've got the 50 and 200-day lines there, both rising again, and that suggests we're about a week or two away from a golden cross. Minimum target on this now, 16.3 pence, and the top of that triangle there from this time last year. Obviously, if you look back, you can see that through 16, there's really nothing between 16 and about 30 pence, so everything to play for there if we can hold above that 200-day line at 11 pence. But the run up to the golden cross looking exciting for MyHealthChecked. Onto a stock which has gone from strength to strength without too much difficulty. Here, mobile streams without raising money should be a straight move, and that's what we've had so far. Resistance line target there, 0.18, which we're looking for by the end of next month while we remain above 0.12 pence. Ideally, we don't go back below 0.1 anytime soon. Moving on to Plexus, and here a rather messy turnaround, but we had a bear trap but from below the February-July support there around 11.25 pence. Above that, looking for the 200-day moving average of 15.4 pence, perhaps by the end of this month. After that little rug pull, and also with the bullish divergence there, lower price low but higher RSI trace, and this could be the move that breaks that 1-year red resistance line. On to the last two. The first one is TheraCryf, and here just the first signs of a turnaround. The situation is that we've broken recent resistance. We've filled the gap up to 0.77, end of day close above 0.77, and we could be hitting that resistance line projection from back in April at 1.2 pence, but obviously we need that end of day close above 0.77. Finishing off with a stock I've never looked at before, and maybe you'll see why from the chart, but Team 17, here we've had a brief dip below the floor of that rising trend channel and the 200-day moving average. Floor of the channel there around £2.50. Above that, we're looking for a return to the rally within that channel as high as £3.60, maybe by the end of October. But the key here is staying above that 200-day line. That's it for me today. More updates over the weekend.